Hey, what's up, guys? Hope you guys are having a great trading day. Was just able to close out the last contract on the short position I had, taking a short all the way from the highs, scaling out all the way at the lows, and then adjusting one full runner all the way down to the previous day low. I was able to use order flow to gauge market participants to really take this trade, and I'd love to break it down for you guys. So first things first, it all comes down to the market profile, which is essential to what I use. One thing I like to say, and this is, I think, what was very detrimental to me being able to grow as a trader, is adjusting based off different market conditions. Yesterday, we could see that we had a balanced condition within this single print, which is something we expected. We were able to build some volume within this imbalance, so we were expecting within the previous day, if we opened up within this balance range, I was expecting choppy consolidation. So one thing that is really important for me when it comes to the market balance conditions plus low volatility conditions are the extremes. That means the highs and the lows of the market. In my opinion, the middle never really matters because it offers an opportunity to get chopped. That's why you see here, I had the previous day's highs labeled out here, and I also had the previous day's low labeled out here. So that is something I was heading into the morning looking for possible break above that fails or a break below that fails at the previous day lows and highs. So one thing that's really important comes to this delta footprint that I always use on my intraday analysis. One thing you could look at is here, this high. We were seeing some notable selling from here and here. You can even see it all the way down here. You could see this aggressive negative 1400, negative 1600 selling that was taken at these highs. We went back, tested again, and rejected strongly. And this was actually a really aggressive move down. If you could kind of see by that low volume taper that was at the bottom, it really moved aggressively down. So one thing I was possibly looking for is the possibility of a break above this area that fails. So you could see exactly when we came up to these highs, we could see there was a large amount of buying, and you could even see it from these 290, 217, 207. And one thing that I looked for is a taper. Taper means a low volume tail that rejects that area, which shows rejection and lack of acceptance. So once I saw that taper, I was able to then notice the pauses on the tape right here around these 13s where I immediately got in, 2-point stop loss above the highs, and I was able to capitalize all this way down, scaling some out at VPOC, which was right here. Then I was able to scale some out at the low of day at that time, and then I was able to scale out at my full target, which was yesterday's lows at the 93. And you could even see that we are actually bouncing off those yesterday's low very, very nicely, which still aligns with market balance conditions. And for me, this is really important when it comes to balance conditions. Every trader should adjust based on volatile conditions, based on trending days, based on choppy conditions, and you should adjust because of that. Because of that, I only took 3 size down contracts, and then I was able to scale some out on the way. Compared to if it was a trending day, I would be able to maybe scale some out deeper into the trade just because it's a trending day. Hope you guys enjoyed this analysis. Peace.